Hello, viewers. Good morning, good day, good evening. Welcome to Crypto Reality. It's your boy Pedro again, and I'm going to be giving you a very quick overview as quick highlight on as what's going on in the markets as usual. I'm going to be starting off with the fact that the market is still very highly choppy and indecisive at the moment, but it seems to be positives from the cryptocurrency market. Cryptocurrency market has been highly indecisive. We're looking at our charts from last year. We had this massive demand zone from last year. It's still very much holding as things stand. So that is good news for the Bitcoin and the cryptocurrency market. The market seems to be very choppy, very choppy, but still very much within this zone. So this zone is currently holding very well, support as things stand. So that is good news for the market. So I talked about the fact that the markets tend to respect trade within a range on bigger times, from bigger time scale and time frame perspectives. And I showed you a couple of examples last week, and I'm looking at a likely scenario playing out from the Bitcoin and cryptocurrency market as well. And so far so good, we are doing well on that. Hence, this zone still holding very well as support. And despite all the choppiness, we're still very much in this zone. So long as this zone still holds as support, I'm still bullish for the cryptocurrency market. And we're also looking at a repetition of a pattern as well. On the flip side, we're looking at a repetition of a pattern that occurred for almost a month between 12th April till 5th May. That was almost a month. Looking at about that same period of choppiness from the market. Same 12th May, same 12th May this time around. From 12th April to 5th May, we're looking at 12th May to today is currently 6th June, about the same time period that the market is also repeating what it did for almost a month. We're looking at a repetition of that pattern as things stand, and even though this resulted to a distribution rather than accumulation period for the market, this can as well play out the same way, but for now it can play out either way. It can play out to the south or to the north, but for right now, I'm still, so long as this keeps holding, I still believe that the market is going to be bullish when it decides to give us a clear direction. As given the fact that I made mention of a couple of reasons why I feel the market will still be bullish in the last broadcast, I'm posting that in the description section, so you can take a look as well. So I'm showing you the other charts where I made mention of that pattern, that range, the big time frame range. We'll be showing that in a second. Very well. So here we are. If you look at the weekly time frame, you can see very well that even from the daily time frame, we're currently bouncing off that pattern. And then you need to be aware that in the case of a downtrend, most times when the market fails to break through support, it's usually a sign of weakness. As it stands now, both the bulls and the bears are weak, no doubt. The market is practically dead as things stand now. This seems to be no interest from both market players. Since then now, it seems like there's nothing practically happening. If you look at the daily time frame, even the intraday time frames also support this analysis. Nothing is practically happening right now in the market. It's very, very choppy, very, very indecisive, very, very messy at the moment. So that's a sign of weakness from both bulls and bears. No one seems to be interested. There's no interest, no interest whatsoever from both markets players. So, well, that means that this can still go either way when the market decides to show us a clear direction, like I said. But given the fact that I made mention of the big time frame perspective, where the market makers tend to want to play within a range, big time frame range, for a prolonged period of time. With that in mind, I'm still looking at a likely bounce rather than a bust through this region and this support. So I'm also going to be looking at from a daily time frame perspective. We have a massive bullish divergence dating back to January, when we commenced the range, the over 3 months range. We had almost 4 months range, in fact, which ended last month. We had from this point, we have this to where we are right now. We have this massive bullish divergence, and it's a kind of a repetitive pattern. We'll be dating back to last year during the consolidation period. We had something very similar. I'm going to be heading down to last year when we were consolidating between May and August. We had something very similar. We had this good. We had this we had this we had this from the daily time frame, and this was a very massive divergence as well. This is from 22 to 34, and henceforth we had this massive bullish divergence and bullish engulfing on the weekly, on the daily, and further, and this transcended to the weekly time frame, and we had this massive bullish run from the Bitcoin and the cryptocurrency market. So if this is to repeat itself, we're likely to see something similar to that. But as it stands now, no one is ready to move the market either to the north or to the south, so this can play either ways. But given the previous reasons I've stated in the past, still rooting for a bullish move rather than a break, and I don't mind being wrong at the end of the day. So also I'm going to be showing you another pattern that seems to be recurrent within this range, within this bigger time frame range. Given the we tend to there's a way the market tends to react on getting to the top or bottom of this range. First of all, when the range top, the first top was formed back in April 2021, we achieved the all-time high of almost 65k. We had this candle formation at the end of the week, and we had a retracement of this candle. This should be around 50% retracement of this candle, or just over 50% of this retracement candle. We had this massive sell-off and huge crash on May 19th to 30k, which we ended up consolidating. And in the midst of this consolidation, we had a bullish pin bar, or the bullish pin bar, which the market had to retrace. Retreat took a couple of weeks again. This was 3 weeks or 4 weeks. 1, 2, 3, 4, about a month. Same thing happened here. 1, 2, 3, 4. 4 weeks. 1, 2, 3, 4. Yes, 1, 2, 3, 4 as well. 1, 2, 3, and 4. Market retraced almost 100% of this bullish engulfing, bullish pin bar, and then we had this massive bullish run from the market. We headed back to the top of this range. We had something like we had a bearish pin bar getting to the top of this range, forming the second top of this pattern. We had 1, 2, 3, 4 weeks. It took us 4 weeks again. We retraced over 100%, and then this massive bullish bearish engulfing, and then the sell-off, which kicked off it started off with a serious downtrend for the markets, which we've been in ever since November after achieving the all-time high. And here we are back again to the bottom of this range, and we formed this candlestick. Here on this chart, it looks like a pin bar, but it's not actually a pin bar. Something close to a pin bar, and bearish pin bar. We've currently retraced over 61.8% of this, and we've done 1, 2, 3, and 4. We're in the 4th week, which is usually the week where the market tends to take off. So we are currently in that 4th week, and we'll see how things play out. But so far so good. So this week is going to be very decisive as a result, to see how if this repetitive pattern is still going to play out exactly as it has played out here, or it's going to take a longer time to play out from this bottom. But these are bullish signs for me in the midst of a highly indecisive market. These are bullish signs for me. I'll be showing you what this that candlestick looks like on the Coinbase chart. This is a pin bar from the Coinbase perspective. This was a pin bar, and you can see clearly that I'm going to be zooming so you can take a look. We've done 28k, which is over 61.8% retracement, but less than 78.6%. so we are currently bouncing off kind of after doing over 61.8% retracement. And if this is to be like, if this week closes on some sort of a bullish pin engulfing, then that would be a perfect repetition of this recurring pattern from last year till date from the weekly time frame perspective. So DXY is still getting weaker. It's getting weaker. We're having a potential double after an initial head and shoulders pattern, which is formed and has played out. It's played out. Well, we're having another potential head and shoulders. Initial head and shoulders was formed last month, like about a month ago, when we commenced this choppiness from the Bitcoin chart. We had this. So our pattern, our recurring pattern from over 5 years ago is still very much, it's playing very well, still very much intact, playing out very well, just as we earlier envisaged. We're having massive reaction as things stand. So we're yet to invalidate that pattern. The pattern is still very much valid and still very much in play, playing out very well as things stand. So from the daily perspective, we've had weakness. We've had something that looks like a head and shoulders pattern from the daily time frame perspective. We've formed the left shoulder and the head. We're looking at a potential right shoulder formation. We've had that already played out on the 1 hour and the 4 hour time frame. We're having another potential head and shoulders pattern from the 1 hour and the 4 hour time frame, which is a sign of further weakness from the DXY. So we're having very clear another potential head and shoulders formation from the 4 hour and the 1 hour time frame, while daily still seems to be forming a potential right shoulder as well. So we are having the DXY still keeps getting weak, and other markets are already capitalizing. The USD card is capitalizing, has been capitalizing so well. You can see this is as from 12th May, when the DXY started getting becoming weak. We've been having this massive sell-off from the USD card. The Euro USD, which is a mirrored version of the DXY, is currently playing out as very well as expected. We're having a potential inverse head and shoulders from the Euro USD, and that is the case also on pairs like the GBP USD as well. So excuse me. So we're having that as well, potential inverse. We've had a left shoulder, inverse shoulder, an inverse head, and we're looking at a potential inverse right shoulder formation on the GBP USD as well. So things stand, the other markets are already capitalizing on the DXY weakness, while the Bitcoin and the cryptocurrency market is still very much in an indecisive state, very choppy, but holding very well at a major and critical support. And this is as a result of the weakness from the DXY. But you know very well that these whales play by a different set of rules. It seems to do these things in turns. So I guess they're going to wait. They're going to get to the turn of Bitcoin at some point, and hence the more reason why I still feel we're going to be bullish at some point, provided DXY is still very much bearish, continues to be bearish. There would come a time eventually when Bitcoin would be bullish, in my opinion. This is not financial advice as usual. So on the flip side, we had this we had on the Bitcoin chart, we had you can see very well that this range is playing out very well. We happen to be playing within this choppiness, is within this demand zone. We happen to bounce off exactly from off the bottom. We've headed to the top, bounced off the top. We've ended up last week with a bearish pin bar. So the bulls need to do something, form something that looks like an engulfing. That means we need to at least close the week above the high of last week, coming at around 32,383 from the Coinbase chart. That would be a bullish engulfing and then that should be signs of more bullishness from the Bitcoin markets. But if you're unable to do that, that may just be a retracement for the spin bar, and that may be a signal for continuation of this choppiness from the cryptocurrency market. So in all this, we need to remember that this should not be carried away that we are still in a downtrend, a proper, well-established downtrend for the cryptocurrency market. We're currently in a very choppy state. So the underlying trend is still a downtrend. So there's this huge tendency to want to head for that down south, because the underlying trend is a downtrend. The tendency for the market to want to head in the direction of underlying trend is usually very, very high, as was the case last month, and then it may want to head up. But given the fact that this market is at a very critical range, and then given the fact that given the already listed points, I am bullish. This may likely be, if the market is ready to reverse this trend, this may likely be a region that's this is a region with a very high tendency to achieve that, and so far so good. The region is holding very well as support, and so long as things keep being the way they are, that via this region holding as support, a close within this region, not being flipped back to a resistance, and 30k, which is a 30k territory. So long as the price still keeps being within this region, holding very well as support, I favor a move to the upside. And given the fact that the DXY still keeps getting weaker, I favor a move to the upside than to the downside. And like I said earlier on, this is my personal opinion, and not to be treated as financial advice. Everything, like I've always said in the past, everything I put up here is for educational purpose and not to be treated as financial advice. Bulls are lacking momentum. As a result, we had a lacking momentum as a result of the underlying trend, which is completely different from the 2 months plus consolidation we faced last year, when the downtrend was yet to fully mature. So we're currently looking at a fully mature downtrend here. So that notwithstanding, there's a reason why the market has so far failed to continue the downtrend at this region, because this is a very critical region. If the market has plans to reverse this downtrend, the chances of that happening at this region are very high, and that's where I'm putting my money as things stand. That's where my money is, on a market reversal rather than a breakthrough. And nothing is 100% certain, but if I'm to put my money where my mouth is, that is where I'll be putting my money. Like I said, it's not for financial advice. It's not financial advice, but strictly for educational purpose. So I hope you got value from this, and if you did, please let me know in the comment section, and feel free to like and subscribe, and share as well. And always remember that this is for educational purpose, like I earlier said, and not to be treated as financial advice. Financial asset trading is a risky affair, so always endeavor to carry out your own research before entering the trade. Do have a blessed, lovely trading week ahead. Bye bye.